Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market update. Hope everybody is doing well and hope all you guys had a beautiful trading week too. And in today's news, guys, relatively flat day. However, we did get some GDP numbers early on in the morning, which painted a fairly bright picture of the economy. So in today's video, guys, we're going to do a couple of things. We're going to obviously go over the GDP report that came out fresh off the press this morning. Keep in mind, tomorrow we also have a PCE report coming out. Even though the markets are going to be closed, tomorrow is a market holiday. The government is still working, however, so we're going to get to see the PCE inflation data tomorrow. Going to be very interesting to see how that came out. And as in other news in today's video, guys, we're going to recap our technical analysis on major indexes, of course, and it's being a fairly important day here today, guys. It is the end of March trading. So we're going to do our monthly recaps as well on all of our major indexes and on our big tech names too. And lastly, conclude with a view into my portfolio for the trades made over the course of this week. So without further ado, guys, let's get right into today's video. Now, SPY roughly flat on the day, 0.02% to the downside, QQQ 0.18% to the downside, and this has really been a trend over the course of the past week. Take a look at the trading on QQQ, guys, over the past week. Really extremely flat since pretty much last Thursday. We really haven't moved much in the form of technology, but what has moved? The entire rest of the market, guys. The bottom half of the market is providing most of your support right now, which is a tremendous thing to see. Now, on this channel, we focus a lot about sector rotation and what we need to keep SPY healthy. The major components of SPY are obviously QQQ, XLF, and XLV. They're the three largest components in terms of market caps. So we've been saying all week that if QQQ continues to show a little bit of weakness, we need to see continued strength in financials and healthcare, and they, as well as their other counterparts, the bottom half of the market that we don't really talk about much on the channel, such as your consumer defensive stocks, your industrials, energies, real estate, and all that stuff, right? All of those have been performing excessively well. Now, keep an eye, guys, on your relative S&P 500 chart as well. They were actually up 0.35% for the day. Now, this is the equal weight S&P 500. If all of these companies were put on an equal weight basis, so if big tech wasn't making up such a large component, how would the markets be doing? Well, you can see that on a relative basis, in terms of if we put everything on an equal weight, the relative S&P 500 has been performing very well this week, and as a whole, also has benefited tremendously. The bottom half of the market, guys, has been playing a lot of catch up over this past 2 months worth of period, right? Now finally eclipsing its own all-time high. So that is very good in itself, guys. That is exactly what you want to see. Continued intersector rotation and the market really broadening out as a whole. So on the heat map today, guys, very broad market. Big tech struggling a little bit. You had some declines in Apple and Meta. Apple getting hit with another downgrade, unfortunately. And even Microsoft was not spared. Semiconductors relatively flat on the day. Amazon having a good day. Tesla unfortunately did not. Now let's take a look here, guys, at our one-day relative. You can see that even better, most of the market really cooperating to the upside here today, even if it didn't really feel like it, right? Technology, communication services, some of your only ones that were in the red, but in the red ever so slightly, right? Very tiny red. In terms of the 1 week relative, you can see here that it was a very decent week, despite relatively going sideways most of the week, guys. The individual sectors of the market, at least the ones that have been left behind for the past couple of weeks up to a month at this point, have now been performing in line. Take a look, guys, your 3-month performance as well, now that we've concluded the quarter, pretty much since the beginning of the year. So this is going to reflect pretty much January through March. Very gorgeous market performance indeed. Really no major sectors getting left behind except for the interest rate sensitive ones, such as real estate, utilities, and a bit of consumer cyclicals, right? All the companies that are affected by lower consumer discretionary spending. Think of companies like Nike, think of companies like Starbucks, right? So other than the interest rate sensitive plays, the rest of the market has really been performing beautifully. So it's a very healthy market overall. Now, before we get into more technical analysis, let's go over our GDP numbers that came out fresh this morning and take a look at the state of the economy. And it was a very healthy one indeed. So our prediction was for about 3.2%. Now, this is reflecting Q4 of last year, always on a quarterly basis. And the revision was actually to the upside. Instead of coming in at 3.2, the economy actually came in hotter than expected at 3.4%. Now, this is a good thing, guys, right? Because we obviously know that the narrative right now is all about interest rates. And when is the Fed going to decrease these interest rates? They're counterbalancing a few different things right now, right? Number one, they can't leave rates too high for too long, or they run the risk of crushing the economy. Too high rates for too long could crush new jobs, hiring, and lead to higher unemployment, which is not what the Federal Reserve wants, and could also crush the economy in the process, slow down that GDP. So they don't really want to get an economic downturn, especially in an election year, right? And the second thing that they have to counterbalance right now is the fact that right? You have inflation that's slightly on the uptick. Now, it has been downtrending for a better part of the last 6 to 9 months at this point, but it is still above their target. So they have to be very, very careful with how they manage rates. They have to be very careful because if they take too long before decreasing them, you run the risk of crushing the jobs market, crushing the economy as well. But if you decrease them too fast, well, then you may run the risk of bringing inflation roaring back. So they're trying to thread the needle, otherwise known as the Goldilocks scenario, where everything stays good. Inflation continues its slow downtrend, the economy stays resilient, and the jobs market as well stays resilient, and the Fed can just start decreasing rates to provide a more accommodative or more accommodative financial conditions. That is what most people are expecting right now, the Goldilocks scenario, aka known as the soft landing, or basically almost no landing at all. So just keep that in mind here, guys, when we're reviewing some jobs data and GDP data and inflation data in the next couple of months. That's what we're on the watch for. So let's take a look at the GDP report that came out this morning. So real GDP increased at an annual rate of 3.4% in the fourth quarter, which shows very healthy growth for the economy over the course of the entire part of last year. Now, we also got a bit of data in terms of how consumers are doing. So disposable personal income, which has been a hot topic over the last couple of months with high rates. People had less disposable income. Has that since changed? Well, take a look at this. Disposable personal income increased 190.4 billion or 3.8% in the fourth quarter. Now, that was a downward revision. However, it's still a positive number. So seemingly, people are still doing quite well. Now, personal savings, another component to gauge whether or not consumers are healthy. Personal savings was 815 billion in the fourth quarter, an upward revision. The personal savings rate was 4% in the fourth quarter, an upward revision of 0.1 percentage points. So not only do people have higher disposable income than maybe midpoint through 2023, but they also have higher personal savings. These were 2 points of contentions that we were coming into the new year with and uncertain how they would be. Well, as of the Q4 data, consumers are relatively healthy still. Now, let's just come down here as well to some of the total numbers for GDP for 2023. The real GDP for the entire year increased 2.5% in 2023, which is very good. That is above the 2022 number of 1.9%. So still coming in relatively good, right? Anything in terms of GDP, guys, is very, very easy. Anything above 2% is economic growth. When we start getting above 4%, it starts getting hot and you start to get inflation worries. So to be right in the middle there, about 2.5% is really, really, really good. It shows the economy is healthier than normal, but still not hot to warrant a return in inflation. Now, how does the Fed expect the economy to do towards the end of the year? Well, they released this 2 weeks ago when they had the FOMC meeting with Jerome Powell. They expect about a 2.1% GDP increase for this current year as a whole, 2024, which does represent a slight little decline from 2.5, but is still above their 2% target. So all in all, the Fed is expecting a very healthy economy for the course of the year. So we have to get reminded, guys, of one thing. So I jotted it down here. What is the bear thesis? Because these markets have been doing very, very well, and a lot of people think that we may be due for a sell-off or maybe even a correction. And I was also in that camp up until hearing Jerome Powell speak about 2 weeks ago. Now, let's just get reminded of what the bear thesis is and address each and every one of these points. Now, the bear thesis is that inflation will start uptrending again. Now, we did have hotter than expected inflation reports in January and February, but we heard from Jerome Powell and the Fed directly correctly, and the other Fed members, when they released their dot plot, that they don't think that the January and February increases in inflation are anything to be worried about. So we'll keep an eye on this, but so far, guys, the data points do just not point to inflation really roaring back. Is it sticky around 3.3%, 3.2% right now? Yes. But is it going to make a big resurgence? The Fed doesn't believe so, and I don't believe so either. So we're going to keep a close eye on the data that comes out tomorrow for PCE. But as a whole, this, as of now, is somewhat of a non-factor. Number two, fairly important one, banks will default on commercial real estate. Now, everybody knows, obviously, that after the pandemic, consumer work habits did shift. People obviously shifted away from going into the office and are now more working from home as a whole. And that's left a lot of empty office space, and a lot of these buildings that were refinanced potentially in 2019, 2020, and 2021 at low rates may have to refinance higher, and their break even in terms of their rent versus their expenses, including the mortgage, can be fairly tight right now. A lot of commercial real estate is now underwater. They technically own more on the building than the building is potentially currently worth right now. That's a big problem. However, this problem is more notably affecting smaller and small to mid-regional banks. And as we saw in the banking crisis last March, what happens when a number of these issuers default on their obligations? They just get pretty much agglomerated into larger banks, right? JP Morgan and Bank of America tend to be picking up these institutions if ever they do fail. So far, we still don't have a mass problem of defaults in commercial real estate. Are there a few small and regional banks here and there that are potentially over leveraged, who have clients that own commercial real estate and that maybe won't be able to pay for them, default on their loans, and that may bring some negativity towards that bank's specific balance sheet? Yes, that's always possible. But is it a nationwide problem to where even the large institutions such as JP Morgan are affected? No, and JP Morgan even said that on their last earnings call roughly 2.5 months ago. They'll be coming up with another earnings in about 3 weeks' time, so we're going to see from them again. But as of now, that is not currently a problem. Number 3 is fewer rate cuts. This kind of ties into point number 1, so I won't talk about it too much. Obviously, if inflation is a little bit more sticky, the economy is good, and the jobs market is good, well, the Fed may not have to decrease interest rates as fast as expected. Currently, we're only expecting about 3 interest rate decreases over the course of the year. And even if they could do only 2, guys, I don't believe the market would significantly react to that in a negative fashion. So fewer rate cuts. As of now, nothing is foreseen that the Fed is going to take 3 cuts off the table. We got that pretty much 2 weeks ago when they gave us the dot plot in terms of the rate expectations. And so far, they are still kind of holding firm on 3 cuts. So that, again, is another point to the bear thesis that even though it does hold very solid ground, it's just not materializing yet, right? Number 4, jobs data decline. Well, we're going to get an NFP jobs report next Friday, but for the most part, guys, unemployment has been relatively good, still under 4%, and jobs have still been created. Companies are still hiring right now, and people can find work. So the labor market is very good. Jerome Powell even commented on this 2 weeks ago, once again in the FOMC meeting. So we'll keep an eye on this one, but so far, jobs are still relatively healthy. And this ties into point number 5 as well. Economic decline is what the bear thesis is going to be. Well, so far, there's no indication of that, guys. We just got GDP today. The economy was healthy in Q4. Obviously remains to be seen what will be happening from this January through March period. And that data we're going to get eventually in pretty much a month at this point. But so far, guys, it really looks fairly decent as to where the economy is not growing so fast that we're worried about a resurgence in inflation. And the economy is also not slowing down so much that we are potentially due for a recession. And now the last one is the most important one, in my opinion. This will be the one that if the markets do come down, it will just be this. Now, greed leads to technical sell-off. We've been saying this for a number of weeks at this point, right? Your fear and greed index has been greedy all the way to extreme greed for a better part of the last month at this point, and leads us to believe, right, that there may just be some time to take some profits off the table for some eventual consolidation. But we look at these markets every day, guys, and I keep saying, as long as your bulls are healthy in their rotation across different sectors, right, as long as QQQ is not doing all of the work all the time, similar to what it was doing last week, the markets are very, very broad right now. So until we see some daily downtrends and losses of these major trend lines, we can't give this one too much weight either, right? There's just a lot of money on the sidelines right now, and the markets continue to grind higher. As long as none of these 5 big macro factors are manifesting themselves, right, in the foreseeable future, we will not be able to get this big technical sell-off here. So that's what we're going to be watching out for. These 5 data points. And guys, these 5 data points don't just, we're not just going to get them tomorrow, let's say. These come out at specific intervals. We're going to keep an eye on them every single month when they come out. So if ever they do start affecting the markets, we will know. It's not as if all of these will come out next Monday at the same time, right? So we do have some time. The one that I'm keeping to watch out for right now is greed leading into a technical sell-off. But so far, there are no signs of that. So hopefully all of that recap here was healthy. I also have some slides that I wanted to show you guys in terms of how healthy the market is right now and what are institutional investors thinking about it. So let's take a look at some of the slides that I have prepared for you guys. Found these pretty much scrolling through Twitter, and I thought they would be very, very interesting for our analysis. So here's our risk appetite indicator. As you can see, we are relatively elevated in terms of most recent history, but nowhere close to some of the peaks of some bull runs in the past. Think of 2021, even 2018, right? So we're kind of right in line with the higher end of when things have been good in the most recent 15 years. As of now, this indicator doesn't really show that we're coming into a blow-off top yet, does it, in terms of risk appetite? Take a look at this as well. S&P 500 return after 5 straight months of up with a over 20% gain. Here we are currently sitting right now at about 25% bottom left corner since the early start of the rally in November. Take a look at your returns 1 month later, 3 months later, 6 and 12 months later as well. And you can see that as a whole, your average returns for all of these time periods have been up. Have there been a few moments where we've had declines? Yes, but for the most part, looking at all these instances leading back to 1961, we have been positive. And just focus on this one here, guys. 12 months later, the market has always been higher. Just goes to show this is the start of the new bull run, whether people want to accept it or not. Now, moving into the next slide here, we are still in the very early innings of a positive EPS revision cycle. So obviously 2022, when everything started hitting the fan at the same time and big tech was starting to lay off employees by the tens of thousands, revising profit margins down and starting to really hunker down for the possibility of a recession, right? Well, analysts started decreasing all of their EPS expectations for the foreseeable future. And usually that is what happens when we get into a little bit of frothiness and into a little bit of market correction cycle. As you can see, guys, we're barely starting our EPS revisions to the upside. It's literally only been about 1 quarter now at this point that analysts have started revising their estimates to the upside. We can still move a hefty bit more before we start really getting in to some, exaggerated analyst EPS upgrades on some of your favorite companies. So that is still healthy as well. And pretty much before last year, net bullish opened option volume for all customers. So here's your net bullish option strategies. So if you think that the market is excessively greedy right now, we've been moving up for 5 months, you would expect people in terms of being long and call options or just net bullish option strategies as a whole to really be fracturing some of our previously held records from the bull market of 2020 and 2021. As you can see, guys, we are nowhere close to being peak bull market right now in terms of how greedy options traders are on the long call side or the net bullish side. So that is a very positive read as well. It just goes to show you guys, early stage bull market right now. Some people still don't trust it, but for a lot of institutions and retail that do, we've had some very, very nice gains. This to me shows that still, guys, the risk appetite is nowhere close to peak bull market. You still haven't seen your growth stocks starting to rally significantly, right? You still haven't seen other risk on assets start to rally considerably. We still, for that matter, haven't even had a rally on bonds to begin with, right? So that will all start with the easing of financial conditions. When rates start coming down, that is when we're really going to start to kind of tick up here, and when people are going to start getting more and more bullish. A lot of people just still sit on the sidelines because there's still a bit of uncertainty about inflation and the timing of interest rate declines. And now lastly, our market sentiment. So market sentiment, guys, even though we are relatively elevated right now, these are just the months of the year. So December, January, February, and March, you can see that despite the fact that we've rallied for 5 months now, we're still not really at peak euphoria right now. Are we elevated? Yes. Can we potentially get a technical sell-off potentially down the line in April or May maybe for a couple of weeks in a row and bring this down? Yes. But is the entire market at risk of a massive sell-off because of some black swan event or because the economy is doing poorly? Absolutely not here, guys. So it's looking very good. And this last slide shows it even best. Here is your macro matrix, the things that we try to cover as much as we can on the channel. So obviously to the left, things are good. To the right, things are bad. As a whole, you can see that nothing is bad. So we can go through pretty much all of these. We'll go through these quickly, right? Consumer sentiment, although it is low right now, it is not rock bottom. That could be a bit higher. Retail sales, rising good. CPI year over year, still a bit sticky, but nowhere near where we were in 2022, right? Everything on this matrix, guys, is relatively good. Unemployment rate, good. Non-farm payrolls, good. We get another one next Friday. We'll see about that. Everything on this chart, guys, there's a few elements that are still uncertain here, but for the most part, we are through most of the big damage that was the case in 2022. So everything is looking relatively good in terms of your macro matrix. Many of these things we do cover on the channel here. And as we've shown, guys, there are a few things that are still sticky, but for the most part, everything is doing very, very well. So don't get your bearish goggles on. Don't get your bearish goggles on yet, guys. Still a ways to go before we start getting any indication that these markets are ready to sell off. And we cover this thing every single day, guys, as soon as we start seeing some daily downtrends and some loss of your major trend lines in SPY and QQQ here. Well, the market is just going to remain healthy. So far, there is no indication of that. We'll keep taking it one day at a time. So with all that being recapped here, guys, I figured I should do that because we come up on the month end right now, coming up on the quarter end as well. Just giving you guys a snapshot of how the market, how traders are positioned specifically here, and how we're kind of wrapping up everything into the week's close. So let's move directly into our technical analysis for our indexes here. And we'll do these relatively quickly because really nothing has changed, right? SPY still in the context of a gorgeous daily uptrend. We actually hit an all-time high in the very late session today, right? Barely cracking to an all-time high, but all-time high nonetheless. And today's trading was just the same as the rest of the week, right? Extremely flat the entire day. And then in your last hour, we get a pump and a little bit of a dump, right? So really flat day as a whole. Next week should be a bit more active in my opinion. SPY still looking very, very healthy. We're going to keep an eye on these lows right here, 518.79, lose that to the downside, and you do get a potential little bit of a daily downtrend. But then the bulls have a lot of support. Keep an eye on this green box. Big horizontal support level, your moving average, the 12, the 26 are there as well, and the bottom end of the trend line is there as well. So before we start losing major ground, guys, the bears have a lot of proving to do to us. As of now, the bulls remain in full control. Weekly looks gorgeous as well, right? Beautiful weekly uptrend simply continuing right now. Can be targeting the top end of the trend line currently. And on the monthly, guys, look at this monthly candle close, right? If I were to remove these trend lines so you see it a little bit better, very bullish, closing the month at the high of the candle. Now, has it happened before where we've closed months at the high of a candle and then got a little bit of a sell-off? Yes, but for the most part, guys, we're in the context of a massive monthly uptrend at this point. And even, let's say, if the market were to completely fall apart, we'd just be looking for a monthly higher low and your previous all-time highs down here at 476. I understand it's a little bit of a ways off, right? That would be a hefty sell-off to the tune of about 8-9% on the SPY. Even if we were to get an 8-9% sell-off at the SPY, guys, it would literally not even be 50% of this move that we'd be retracing before finding support. Your moving average would curl up there as well. Higher low for further trend continuation. So this bull market, guys, is well underway. And for anybody who's expecting a crash like this, right? Just remember, for anybody that's expecting a crash like this, you need most of these long form data points to start working in your favor. And so far, they are just not. They still point to a relative bullish tendency. And these guys, these take a while to play out, right? Before we have inflation clearly on a net uptrend, we're going to need 3 months plus of data to show us that uptrend at this point, right? In terms of jobs data decline, economic decline. We're going to need 2-3+ months of data to confirm a certain trend whatsoever. So just keep that in mind. Now moving on to QQQ. So QQQ also looking fairly good here. Relatively same analysis as the SPY, right? QQQ has been excessively weak pretty much since last Thursday, since the Fed meeting at this point, right? However, we are just looking for a daily higher low for further uptrend continuation. You can see it best on the NASDAQ futures. NASDAQ futures, right? This little resistance area right here, call it about 18,250. The bulls are just sitting on that right now, right? So beautiful move up. We're looking for the daily higher low. This is pretty much a daily bull flag, right? For the last 6 days, pretty much, to just be putting in lower lows, lower lows, lower lows, and the bears not being able to run with it just goes to show you how strong these bulls are, right? Looking very, very good for a potential daily uptrend continuation. We're sitting right at our moving averages, sitting right on the support, and we're very close to our trend line as well. So all of this area of confluence is going to be tough for the bears to really push through. The only time that they'd be able to push through something like this is if we get really bad news. So tomorrow, the PCE data could potentially do that. But other than that, guys, if PCE data comes in pretty much in line or better than expected, well, the bulls are just going to go on a nice little tear. The QQQ bulls, guys, for the past week and such have been relatively muted. Financials have been good. XLV Healthcare also has really upticked in the last 3 days. QQQ the whole time has been muted. So if financials and healthcare take a little bit of a breather, your QQQ bulls are going to come alive and continue grinding this S&P 500 higher, in my opinion. Moving on to XLF Financials. Financials having a very beautiful day as well. Financials up 0.55%, looking excessively good. Daily uptrend simply continues. New all-time highs at this point. And at this point, any pullback, guys, going to be looking for a daily higher low. Anything above 41.21, daily higher low for further trend continuation. Now, at this point, even on the weekly, we are looking excessively good on the weekly through our big area of congestion, which was the previous all-time high. At this point, the bears have their work cut out for them. If they were to try to make a daily downtrend attempt, they're going to have to get through this big area of which was previously resistance. Now it's going to be support. It will not be an easy job for them. So bulls looking very good here. In terms of the monthly here, guys, look at this monthly candle close. I'm sorry, I didn't do the one for QQQ. QQQ, monthly candle close, looking a little bit weak, but really, guys, that's just because it's been flat for a majority of the week. If even one day here would have put us at a new all-time high, your monthly candle would have closed a bit more bullish. So really can't determine anything from this most recent candle close. All we can say is that the context is extremely bullish, and the fact that your rest of the sectors now are getting more and more love, guys. Technology is definitely not falling off a cliff anytime soon. They're just taking a little bit of a well-deserved breather before a potential next leg up. Now, healthcare also looking very good. Daily uptrend confirmed. So any pullback at this point, just going to be looking for a daily higher low, anything above 145. Daily higher low for further trend continuation. Healthcare is kind of really trapped at the top end of this range right now, right? The one area acting as resistance right now, about the 148, your previous areas of your new all-time high right here. So although we are consolidating or have been consolidating sideways for a better part of the last 5 weeks, the breakout is starting to happen right now. So curious to see what the bulls can do with this. MACD crossing to the upside, finally crossing to the upside, guys, for the first time since this 5-week period of consolidation. So I do believe in the bulls' capacity to start and run with this aggressively and give us another beautiful weekly leg higher, looking very gorgeous. Upside target of resistance at this point, guys, 150. If anything starts changing on the lower time frames, I'll start giving you guys lower and lower targets. But as of now, the bulls in full control of everything, even on the monthly here, guys. Look at this beautiful monthly new uptrend right now. Gorgeous monthly candle close. So even if we get some extended market sell-off for XYZ reason at this point, guys, any sell-off just going to be for a monthly higher low for further trend continuation. And look at this previous area, your previous area of all-time highs, going to be excessively tough for the bears to get through this in the context of a overall new bull market. Will just be monthly higher low into further trend increase, in my opinion. Moving on to IWM Russell. IWM Russell actually performing nicely on the day, 0.31% to the upside. Now, we're in the context of a new daily uptrend, running into the exact area of resistance I pointed out yesterday, right? The bottom end of this range, that was previous support. Use it as resistance here a few times, as a matter of fact. Now we're coming into that area again. So upside resistance, guys, still stays at about 211, 212 right now. Not able to mount over that today. So we might be looking into next week for a new daily higher low, grab some more momentum, and try a second attempt at it. Anything lower right now, anything above 205 pretty much, just looking for that daily higher low for further trend continuation, looking good. On the weekly, also looking very good. We now have our new weekly leg higher, breaking out of your previous highs right here, everything looking very good. And even on the monthly here, guys, gorgeous monthly candle close. This just shows extreme momentum, wanting to push to the upside. We finally have now for the past couple of months, the MACD pointing to the upside as well. Look at how bad this one has been trailing, right? SPY, we've now been in monthly uptrend mode pretty much since midpoint last year. QQQ as well, rally mode since midpoint last year. XLF, we've just come here in XLF now, just come here in XLV barely last 2 months, and even the Russell guys just barely coming into it right now. So all these sectors have some catching up to do. So the Russell is poised to start gaining the levels here into 2024. As I said, I believe the best months for the Russell will be as we approach that first rate decline. May, June should be really explosive months for the Russell as traders just speculate and anticipate that first rate decrease. Now moving on to the Dow Jones. Dow Jones relatively healthy on the day, 0.12%, nothing bad to say whatsoever. Kind of struggling here with a little bit of a double top, but we are in a beautiful area of a daily uptrend right now. Keep in mind, if for whatever reason we fail this level, well, we're gonna keep a close eye on our higher low right here, 39,270. And at that point, guys, if we can hold this, well, we're just maybe going to be looking for a little bit of a tightening range, potentially similar to exactly what the Dow Jones did in this period right here, where they were unable to break the highs, but also unable to set in lower lows. That would be the case in which we come down too close to this low right here and get trapped in a little bit of a range. As of now, there's no indication of that. May just get some continuation early on next week if the markets continue this March. And now weekly looking gorgeous for this third weekly leg of momentum higher. Yes, the RSI is relatively overbought right now. However, as long as we don't have short-term loss of our daily timeframes here, we can't necessarily be looking for a weekly pullback just yet. On the monthly time frame, everything is looking gorgeous. Look at this beautiful monthly upswing here to the bulls. Everything looking picture perfect for the Dow Jones, in my opinion. And as I was saying on the SPY, even if we were to get market calamity, right? Just a sell-off event because of several negative factors at the same time, technical sell-off, maybe a few economic data points come in worse than expected, right? Well, any major sell-off, guys, we're just going to be looking for a monthly higher low. And the best area you can keep an eye on, guys, is going to be your previous all-time highs, right? Even if we were to pull back from here to there, that would be a roughly 7% pullback for the Dow Jones, which is heavy, right? Even last fall when the market sold off, that's how much we got, 7-8%. So that would bring us right down here, not even taking back 50% of this entire move. Just going to be looking for higher low into higher high for the rest of 2024. Everything looking very good here, guys. No red flags at all. Now moving on to Apple. So Apple ending the day here down 1%. Once again, on an analyst downgrade. So Apple, unfortunately, really unable. It's been excessively difficult for them, except for this period right here. Apple has not been able to put in 2 green days in a row for so long at this point, right? If you weren't to count their prior earnings and their earnings day, I mean, this was actually a decline day, even though it's a green candle. How many green days has Apple, how many times can you see Apple put in 2 green days in a row since pretty much the early start of February? Not that often, guys. So as of next week, it'll be pretty much 2 months where Apple struggles to put in 2 days of green in a row. It seems as though as soon as we start building some momentum, some negative news, such as a lawsuit comes out, or some analyst downgrade comes out. At this point, guys, I'm pretty sure we're through most of Apple's negative catalysts. At this point, I'm just waiting. You know what? Throw the entire kitchen sink at me. I'm ready for it. Any more analyst downgrades, let's get them out of the way right now. Any more lawsuits, any more negative news, let's get them out of the way right now. So Apple can just put these things in the past and focus on the good things that they're going to be coming out with in the future, such as the release of their new iPad that they showcased today, and such as the release of their potential AI chapter of their business that they're going to be starting, most notably with AI smartphones and AI iPads, AI MacBooks as well. They're going to be doing those, and those will be unveiled at their conference, which is pretty much set for the month of June right now. So let's get all these negative catalysts out of the way and start looking to the positive future that Apple has been working on now for quite some time. Now, right in the context of currently right now, we've lost the daily uptrend with breaking these lows right here, setting lower lows. Now, we were watching yesterday, gauge the size of the bounce to see if the bulls have enough to set the daily higher low into higher high. Well, today it was a gap down open here. So technically speaking, we did lose the hourly trend right away. Now, what the bulls have to do, we have to protect yesterday's lows pretty much, or today's lows rather, 170.54. If we can reset this hourly uptrend and get rid of this analyst downgrade news pretty much by next Monday, well, your daily bounce will continue at this point. And I said yesterday, where does the bounce need to get for me to get comfortable that Apple bulls are starting to get a bit more back in control here? The bounce, in my opinion, needs to get at least as high as the 618 line, or at best the 78% retracement line. These two levels are very important, guys. That would be around 175 or all the way up to $177. That just creates enough space for the bulls to eventually set the higher low, higher high into a newfound daily uptrend, similar to exactly the same result that we had back here. Higher low into higher high, start of the daily uptrend, and then we just look how much of this weekly move can the bulls take back right now. So Apple not out of the woods yet. We are still looking to our lower bound of support here, guys, right? 170 down to about 165. This is your last line of defense for your bulls before we start falling into lower territory, 155 all the way to about 150. As of now, everything not looking too bad for Apple, but the bulls definitely have their work cut out for them. I'm not giving up hope on Apple. Love the stock. My intrinsic value for the stock over the course of the next year is closer to about $190. So in my opinion, guys, Apple is somewhat undervalued right now, and a lot of analysts would tend to agree with me as well. A lot of analysts, their price targets are between 200 and 250 for the end of 2024. Have a few people joined Team Hold and Team Sell and Team Strong Sell in light of the negative events that have been plaguing Apple pretty much since the start of the year? Yes, but have the fundamentals of the company changed at all? No, they're all temporary issues that Apple is going through. We brought up a number of them a few weeks ago on the channel. If you want here, let me pull up my screen. Where did I put them? I buried them somewhere. So if you want, just take a quick look at these. You might want to screenshot them or pause your screen right now. These are all the issues that Apple is going through, and they're long-term pros, which is really the mark of how beautiful a company Apple is right now, right? These long-term pros, in my opinion, largely outweigh the potential temporary issues right now. On the monthly, guys, the monthly, well, we really need to protect these lows here, guys. If you lose your 166.77 and close April below here, we will be in a bit of a monthly downtrend at that point. And you guys know monthly downtrends, even guys, if we just slightly dip below, they take so long to reverse. The fastest scenario is your V shape, but barring that, they take so long to reverse. Look how long a monthly downtrend takes to reverse here, right? Before we start getting some semblance of some rally right here, which started pretty much last year. They take a long time to reverse if we get into monthly downtrends. Now, that being said, we haven't lost it just yet. It's just an expectation of if that happens by the end of the month of April, what's going to result from that. As of now, Apple is still looking poised to defend these lows. If we haven't lost them with all the negativity in the most recent weeks, stands to argue that we may just not lose them at all. Apple with earnings here, 25th of April, so in about 3-4 weeks time. Now moving on to AMD. AMD not looking too bad here today, 0.5%. AMD really doing a whole lot of nothing this week, right? In the context of this daily downtrend right now. And now the bulls are trying their best here, guys, to mount a little bit of a rally, start getting back above this big resistance area, which we highlighted over the past couple of weeks, right? This is really the top end of this range that the bulls were just trapped in for a very, very long time. You can see it best on the weekly here. In terms of your daily, getting back to that right now, this area of resistance is once again acting as resistance for the bulls. And the moving averages as well are above us. So that's why the bulls are having a bit of a hard time getting through there. So now we're pretty much back trapped in the same level that we were on a month ago for AMD. Things are not looking that bad. However, though, even if we do continue this daily downtrend, we have huge support down here in this green box here, guys. Previous support all the way down here from early February into March, and also your previous resistance of your previous all-time highs. So this seems to be a highly convoluted area. I do not expect the bulls to lose this one. We are still in the context of a gorgeous weekly uptrend right now. I understand the Bears have taken back a lot of this move. Put the fib on this and you'll see how much of this move they've taken back almost 80% at this point. So the probabilities do argue that the best shot that the bulls have of recovering this is a tightening range. At this point, the V-shape becomes highly unlikely, especially on a weekly time frame. The V-shape comes highly unlikely unless the company puts out some outstanding news prior to their earnings, which will be at the end of April. That is going to be unlikely, though. The best chance that the bulls have is being able to set somewhat of a tightening range, get back above this area of resistance, and then build off of that for their earnings rally if earnings are good. So AMD, not looking too bad. If ever we come back down closer to this area, I'll continue to play this stock. 165 to 160 is my target zone. Now moving on to Amazon. Amazon not looking too bad at all. Give me a quick second. All right, so Amazon breaking up to the upside, 0.31%. Right? We're breaking above, but we're not getting much follow through, are we? In my opinion, guys, Amazon really needs like a 2% day to get us clear of this 180 zone. Currently, we're still, we're above this resistance now, which was pretty much the 180 mark, 178, 180 mark. Now we have to challenge the all-time highs, which are sitting about 188. So although we've cracked through this area, guys, we really need to get significantly above it, use it as support potentially, and then get a nice move higher on the weekly. So Amazon bulls in full control, daily upturn right now. The guide should be your 12 EMA. You can see how few times they've lost this 12 EMA over the course of the past 2-3 months ever since they released their earnings. So the bulls are looking good. We're now through a big area of resistance. Not through it enough that I could confidently say that we're going to use it as support and be able to lift from here. I would really need to see a little bit more to really consolidate our gains, sit on it nicely as support, and then we can probably get that rally here. So everything looking good on the weekly as well. Amazon is in a clear weekly uptrend. We were saying this was a weekly bull flag, potentially due for some weekly continuation. Seems to be exactly what's happening. So no red flags on the daily. Red flags really happen, guys, if we start dipping below our 12 EMA and lose these lows at 173.71. So far, no indication of that. And even on the monthly here, guys, monthly is looking so gorgeous. Look at this candle, guys. After a strong February, doji pointing to the upside, tail on the bottom, closing near the high of the month, just goes to show that Amazon potentially has more in the gas tank for the upcoming month of April. And the month of April, if it's a good month for the markets as a whole, most likely going to push us beyond the all-time highs. So Amazon looking extremely good for the breakout daily, weekly, and monthly charts, looking just poised for a nice break to the upside. Now let's move on to Google. I'm sliding down my chair here, guys. My bad for that. So in terms of Google, 0.21% to the upside. Google really also not doing much this week, but just steadily holding gains. In the context of a beautiful daily uptrend right now, we're just going to be looking, as soon as this move tops out, going to be looking for a daily higher low, anything above 147, just looking for that daily higher low for further trend increase at this point. Sorry about this pink line. That was the expected move for the week, not a area of support or resistance or whatnot. On the weekly, everything is looking gorgeous too, right? Beautiful engulfing move on the weekly time frame. So if for ever which reason Google gets hit with negative news, similar to what Apple is being hit with, let's say Google gets hit with some downgrades, with some lawsuits or whatnot, we lose this daily uptrend into a daily downtrend, well, we can be expecting the gap fill down here to about 145. That would open up a gorgeous breakout retest of this big zone here, guys, right? This whole 145 down to 138 roughly. Huge area of support at this point. Big previous resistance, big support zone as well. We do come down in here, guys. Most likely the bulls will play very good defense. Going to be looking for the weekly higher low for further continuation. And on the monthly here, guys, look at this monthly candle close by Google, right? Gorgeous monthly uptrend. One of your stronger candles as well. The last time Google had a candle like this, we did indeed get follow through into the next month. So a next month of follow through, guys, will put us most likely above the all-time highs, sitting right now, over above 155. Google, if we pull back on Google early next week here, guys, I'm going to be looking to make some plays. 149, 148. Going to be playing this fairly aggressive because I do think the direction right now is bullish across all of your long-term timeframes. So really want to be playing it somewhat aggressive, somewhat close to current price, as I do believe the risk of being assigned on some short puts, well, the risk is always going to be there. But if I get assigned the shares, I'm very likely, guys, to be able to benefit from a significant rally in the share price. So looking good on Google. Now moving on to Meta. Meta moving again 1.68% to the downside, and Meta now Meta now pretty much establishing a few of the red flags that we were talking about early on in the week, right? We've now lost the 12 EMA on the daily. Keep an eye, Meta really doesn't lose the 12 EMA often, and when it does, it tends to get it back in the very next day of trading. That has not happened. Now, this is the third day that we've been trading under the 12 EMA. We've also lost this big area, this yellow line right here. Previous resistance was supposed to be current support. We're now under it. That's the 490 mark, down to about 45 at this point, right? And also on the weekly, guys, closing a relatively negative week for Meta as a whole. So is Meta potentially going to be due for a bit of consolidation? Well, that will remain to be seen as of next week, but still, guys, fairly decent decline since last Thursday. Meta down about 5.5%. Keep an eye on these lows right here. It's going to be 480, guys. If we break 480 and crack these lows to the downside, the bears have a great chance at setting the lower high into lower low. That would be weekly consolidation, guys. Then you'd be looking to your lows 455, and look what is down there in our 455, 457 range, your 12 EMA. So could we just be due for a little bit of weekly pullback here on Meta, set a new weekly higher low and move higher? Very possible on Meta. Meta has earnings, guys, only at the end of April as well, so that won't be able to save them for the next couple of weeks. One thing's for sure, guys, if we do revisit the lower 450, 440, that is where I'm heavily looking to make some swing trades myself. On the monthly candle close on Meta, not very pretty, is it, right? This is one of your uglier candle closes that we've had in recent memory. Even the ones here weren't as ugly as this one. So if ever Meta chooses to consolidate a little bit, you know, if you ask me what my gut feeling is right now on Meta stock, okay, so now we have come down more into acceptable territory of the RSI, and we do have earnings coming up pretty much in the next 3-4 weeks. So if Meta decides to consolidate here for the next 3-4 weeks before their earnings, set the monthly higher low into the month of April as well, come down 450, 440, I do believe it's just going to be to set the monthly higher low. Earnings are probably going to be fantastic, and that's when you'll maybe get your next leg up. So I'll be looking to play Meta if we do come down here, guys. 450, 440, juicy area for me. Now moving on to Microsoft. Microsoft not looking bad either, even though it was down on the day, 0.17%. Microsoft really looks like the QQQs, right? Pretty much just, you know, even though it was down this week, it was down since last Thursday pretty much. We're down about 2.5% on Microsoft. Not the end of the world. This really looks like a bull flag to me at this point. Defense of the 12 EMA for now 4 consecutive days in a row. Still not back to our trend line area, right? Not trend line, but rather range bound zone, which we were bound to between 415 and 398 earlier on in this year. We do seem to be above that right now. So just really looking for the daily higher low into potential trend continuation. Gorgeous support right here. Both moving averages are there, and the top end of our range is also there as support. So this 415 level is going to be very, very tough for the bears to break, in my opinion. On the weekly, Microsoft is also looking very good. Pulled off its classic consolidation, move higher, consolidation, move higher period. And now we're just looking for some further follow through on Microsoft. Microsoft also with earnings right now, currently on the end of April as well. Most of your big tech guys is going to be pretty much end of April, early May at this point. On the weekly, everything looking very good. No red flags. And on the monthly as well, Microsoft looking extremely good. Candle close, bit of a tail on top, a bit of a tail on the bottom, so it doesn't really give us much sense of direction. That makes sense when we look at, what the trading has been for a better part of the last month has been fairly muted, right? So our lower time frames show no red flags. Our daily, very healthy. Weekly, very healthy as well. And the monthly just continues in this gorgeous monthly uptrend right now. No red flags for Microsoft. Moving on to Netflix now. Netflix, well, if you look at this chart and you see which things we use to establish who's in control, you should notice one very specific thing that's been happening over the past 2 days. We have lost the 12 EMA. The reason this is important is because we hadn't lost it since pretty much our earnings. Prior to that, yes, but now can the momentum be to the bears to the downside? Well, yes, absolutely it can. As a matter of fact, it is. We have lost our most recent higher low, 605.78. We lost it earlier on in the day. So now at this point, guys, your daily uptrend is currently lost. Now the bears have the chance to set the lower high into lower low. Is it a big deal losing the daily uptrend? Is Netflix finished? Not really, guys. On the weekly, still looking excessively good, right? Weekly uptrend right here. Now at this point, this one weekly leg up, just going to be looking for a higher low. Anything above for 550 pretty much, just for a weekly higher low for further trend continuation. Netflix has tons of space, guys. I really wouldn't be worried about this company too much. It starts the earnings seasons off before everybody. Them and Tesla usually report first. They're coming out on Thursday, the 18th of April, so still roughly about 3 weeks away at this point. Could we expect a little bit of consolidation prior to their earnings? Perhaps, but it would be healthy consolidation nonetheless. Consolidation, right? Gonna be looking maybe for this higher low right here. Keep an eye, 575. Confluence of your 12 EMA, and also represents the prior big area of resistance that now should be acting as support. So that could be a very juicy area of consolidation. If Netflix just continues to consolidate like this, it's just healthy, even on the monthly here, guys. Extremely healthy monthly uptrend too. So even if we downtick here into the month of April, just looking for a monthly higher low for further trend continuation. So keep that in mind. Everything looking good on Netflix. Moving on to NVIDIA now. Well, NVIDIA has had a relatively flat week, hasn't it? Actually, for the most part, NVIDIA pretty much down from the high of Monday's trading, roughly about 7% for them. But in the context, guys, of an overall uptrend at this point, right? Beautiful daily uptrend right now. Just looking for a daily higher low, anything above 850, just higher low for potential higher high continuation. Where we get nervous is if NVIDIA bears take back too much of this move, then we may set up for lower high into lower low, and that's when you would get your weekly consolidation. As a matter of fact, this is the first weekly red candle for NVIDIA pretty much since the start of the year, if you can believe it, right? Very, very notable thing for us. So can we potentially get, guys, if semiconductors continue their sell-off here, semiconductors as a whole, right? The index, this is SMH on the index, right? Daily bull flag for further continuation, even on the weekly, guys. No real red flags. Like, are we a bit extended to the upside here in terms of our RSI? Sure, but are there big flashing red lights in my face right now to tell me that this chart is going to do this? Absolutely not here, guys. The best we can get in terms of a sell-off, guys, would maybe be down to the 12 EMA at that point, and that would look completely natural of a move, weekly higher low for trend continuation, even on the monthly for semiconductors. Are we potentially peaking out? Yes, but it doesn't mean that we have to go straight down. We can also just go sideways, right, for about a month, and nothing would really change at that point either. So that's what I'm kind of looking out for on semiconductors as a whole. NVIDIA will obviously lead to the downside. It has some huge sentiment over, the rest of the industry as a whole. So if NVIDIA starts dropping off before everybody, will its peers follow? Most likely, yes. But are we in jeopardy of losing long-term bullish momentum? Absolutely not, guys. We're still just looking for the weekly higher low eventually when it does come. And even the monthly, guys, just even looking for a bit of monthly consolidation. NVIDIA does this often to where in the context of a global bull run at this point, right, it can consolidate for a little bit of a month, and then potentially rise higher. NVIDIA earnings are still a long time away. They report very late. They're all the way in May. So if semiconductors take a little bit of a breather over the course of the month of April, while the rest of big tech makes up for it, it's going to look perfectly natural on these charts. So that's maybe what I'm expecting for NVIDIA. One thing for sure, guys, if we do come back down to our big area here, 750, right? 800 down to 750 becomes really attractive. We're going to be setting the weekly higher low at roughly the midpoint of this entire rally higher, and that could lead to some very healthy monthly consolidation. Take a look on the monthly, guys. That 750 level would barely be a 25% drop in context of this entire move. Healthy monthly higher low into further trend continuation. So if April's a red month, I'm not saying it will be, but if it is, it's just going to be very healthy, allowing all individuals who may not have been able to pick up semiconductors from the beginning of the year, maybe to go shopping for some, right? A lot of great companies out there, NVIDIA, TSM, ASML, AVGO, the list just goes on, AMAT, right? So there's a lot of great names that are at all-time high right now that I would not hesitate to buy if we get a significant dip. Now moving on to Tesla. So Tesla, right, Tesla got to be very careful because they have deliveries coming out next Monday. So really we have no more trading days before they release deliveries at this point. So the price action, guys, almost right now when we have such a big catalyst next Monday is almost meaningless, right? Even though we are in the context of a daily uptrend right now, negative on the day, 2.25%. We're just looking for a daily higher low, anything above 166.50. Just going to be looking for a daily higher low to continue this daily uptrend as much as we can. Why? we need to take back more of this weekly leg of selling. So far, the bulls haven't taken back enough of it to say that we're safe, right? We've taken back 50%, which is decent, but we haven't taken back the higher probability levels, which would have been 188 all the way up to about 195. If we would have been able to mount a rally before deliveries, it would have created enough space that maybe deliveries and earnings, if they're bad, we may have enough space to still set a weekly higher low into potential weekly uptrend as we approach the bottoming out cycle for Tesla right now. Tesla obviously being plagued by negative news now for the past 3 months. It's normal because of the nature of their business. Reduced demand because of higher inflation, higher interest rates leaves people with less purchasing power as well. People are just not shopping for cars. As I've said many, many times when we cover Tesla, guys, I am a Tesla bull, but you have to recognize that it is a cyclical stock. Even though a lot of people don't like to admit that it's a car company, it is a car company. Now, do they do a number of other things? Yes. Is it a technology company? Yes, but it's a car company first, right? When a lot of their business is being affected by the same things that's affecting the auto business, well, you have to admit that it is at the end of the day, for now at least, it is more of a car company than it is a technology company. Will that change in the future? Most probably yes. But as of now, it's getting grouped up with the automotive sector. And the automotive sector as a whole, whether you're Mercedes-Benz, whether you're, Mercedes-Benz, whether you're Ford, whether you're GM, all of them have been reporting lower new car sales and just, reduced demand as a whole because of higher interest rates. It's normal. It's a cyclical business. That being said, keep a close eye here, guys. If deliveries come out negative, sorry for that little, output there, little parenthesis rather. So if we do break to these lower levels after negative deliveries next Monday here, guys, got to keep a very close eye on these lows right here, 151. And then we get our earnings coming up pretty much in 3 weeks time, 17th of April. So in my opinion, price action going to be fairly muted here, guys, until earnings. I don't think traders want to take heavy positions before those because we're so close to a breaking point, right? If we flush through here, you lose this entire trend to the downside. This would be oversold conditions. You would flush your last area of support, At that point, guys, if we do that, that's when I want to buy the stock. That's when it's going to be at peak fear, in my opinion. And that may only happen after earnings as well. Maybe 2-3 weeks after earnings, do we hit maximum fear down in the 130s, down to maybe even the 120s? I don't know if it's going to get there, but if we do hit maximum fear on the stock, there's a high likelihood it could come down there. I would definitely be buying, guys, because, all bad things come to an end as well. Eventually, Tesla will be able to rebound from this cyclical portion of the business that it's in right now, but those things really take time. So Tesla, keep a close eye. Next Monday, we're going to cover the deliveries on the channel, of course. And obviously, if they're good, well, then we need to see the bulls continue this daily uptrend as high as possible, guys. I gave the levels earlier, right? As high as about 195. If you can get me between 190 and 195, the bulls have created enough space on the weekly to give us a chance at setting the higher low after earnings and reversing this weekly downtrend that we've really been stuck in now, guys, for pretty much the better part of the last 9 months to roughly a year at this point, right? Now moving on to Palantir. So Palantir getting hit hard today, 6% to the downside. Why did Palantir get hit? Well, analyst downgrades. They said the stock was too expensive. They weren't happy about the valuation, so 2 analysts came out with subsequent downgrades. Now, stock is down 6%, and this is one of the worries that we had coming into yesterday's trading as well. Inability to break this double top area. And I said, if ever we start trending lower and crack these lows, your daily downtrend will be underway and your weekly consolidation still continues. Now, at this point, guys, your area of contention is going to be 22.22, right? 2222 pretty much to keep it even. If we lose that, unfortunately, it would be a loss of the weekly uptrend. Would it be a weekly downtrend? No, weekly downtrend is lower high into lower low. Now, the bulls are still set up healthy. However, I like this level better. $21.50 down to about $19. It is larger support. It's previous resistance last year. This should be the big area of support that everybody's looking forward to. Now, in terms of valuation, I just did some valuation on the stock. We haven't done it in a while, pretty much since their earnings. So just to reiterate their valuation, are they expensive? Well, their EPS growth for the next couple of years is going to be 28% a year. Very good EPS expansion. Now, their 2024 EPS is about 0.33. That gives them a forward PE at $23, the share price right now, of 70. At a first glance, 70 forward PE may seem a little bit rich, which is why we use the PEG ratio. It divides their PE ratio by their growth rate, and you can see they're about a 2.5. Is 2.5 a bit rich? Yes, but there's so many tech stocks, guys, that trade at 2.5 to 2.5. It's not crazy. Is it good? Not really. But is it extremely, extremely overvalued? No, that would be like a 3.5, 4.5 peg. That's when even my eyes start to widen a little bit, and I have to say, not sure I want to buy this one. Palantir, if we come down, guys, into the into the $20 range, this peg will be sitting much closer to a 2, which would really not be that expensive in considering how fast Palantir is growing, both revenue and earnings per share here, looking very good. So I'm looking towards the bottom end of this range specifically. Now, if we take a look at the monthly chart here, well, we're in the context of a gorgeous monthly uptrend right now, and you can see the month of March ended here pretty much red to the downside. So can we be expecting something like this? Maybe even the month of April. What are we looking for? Monthly high or low for further trend continuation. Look, big resistance here should now be acting as support. Big support back here as well. I don't believe the bears are going to be able to get through this one easily, which is why if we pull down further into this area, am looking to make some plays on Palantir. $21, $20, $19 seems like a very juicy area for me. So despite the analyst downgrades saying it's too expensive, it's really not that too expensive. Is it expensive? In terms of the direct meaning of the word expensive? Yes, it's expensive. But relative to its peers, not so much, to be quite honest with you. And just on if you just take Palantir on its own, guys, it's not really that expensive. Arguably, well, not arguably, this is a fact. Back here when it was trading at these same prices back in 2020 and 2021, when they were not profitable and revenue was roughly a third of what it is right now, that's when they were excessively expensive. Here, are they expensive? A little bit, but not too much, guys. Not really to warrant general fear above overvaluation, in my opinion. I mean, the stock, to put things in perspective, guys, this stock is cheaper than Costco, even though Costco has been tearing off at all-time highs, right? So that's a bit of an extreme example there, but just goes to show you guys, there are other companies in the market, even those that you would least expect it, that run higher financial ratios than this. So not looking too bad on Palantir. As I said, $21 down to $19, my sweet spot. And now lastly, PayPal. PayPal up 0.63% on the day, really an inside candle the last 3 days of trading, right? So can't really derive much from today's price action. All we can say is we're in the context of this gorgeous daily uptrend, and so many things working in our favor for PayPal right now. Any pullback right now, looking for a daily higher low, anything above 64.72, daily higher low for further trend continuation, guys. We're now healthily above all our moving averages, right? Above this 200-day moving average, this green line right here, haven't been healthily over that since 2021. First time have we done that. We're also healthily above this downtrending channel line. So technical breakout of two key indicators, the 200 daily moving average and the downtrending channel line that's been plaguing us for the better part of the last 2 years at this point, all while being in a daily uptrend and also being in a weekly uptrend too. So all in all, the bulls are looking very healthy, right? Weekly uptrend is clear as you can see. Now, on the daily, guys, if for whatever which reason next week we lose this into a daily downtrend, is that going to be bad? No, not really, guys. We're just going to be looking for a weekly higher low. Sorry, I have to keep stretching this chart up. It's PayPal's fault for dropping too much. That's why I have to stretch the chart out, right? So in terms of the weekly, guys, we're just going to be looking, even if daily downtrend happens, just going to be looking for a weekly higher low for further trend continuation, in my opinion. Looking very good. This 63, 62 area, if for whatever which reason we get close to there, I'm going to be playing the heck out of this one. And on the monthly, guys, almost, guys, almost. April would probably give us the certainty of that. But look at this, guys. Monthly uptrend is almost here. We just need a break and close above 68.28. We're almost there. This break of 68.28 in the month of April would give us the first monthly uptrend since 2021. So everything looking extremely bullish for PayPal in the short and medium term. The next price target for me in terms of upside expectations, guys, is going to be this guy right here, $75. Would not be surprised, guys, If this technical breakout continues, we can probably hit this, guys, within the next 30 days. And I really would not be surprised after how much this stock has been subdued. And now, with the broad market rally, names like PayPal are finally starting to get a bit of love. So that was pretty much everything for stocks and the monthly recap. Hope you guys enjoyed that. Now let's take a brief look into my portfolio for the week and see what was happening there. So taking a look at the portfolio here, guys, you can see that we ended the week pretty much 5.26% year-to-date gains. The SPY is currently crushing us. The SPY on the year up about 10% here, guys. And in terms of the NASDAQ is also crushing us. NASDAQ up about 9.45%. However, I'm very pleased in the way the portfolio has been managed over the course of this year. Kind of displeased with the amount of gains that we've had. However, they're coming and I'll explain why. So early on in the year, we obviously were affected by a few positions we got assigned in November and December. They were plays that were really sensitive to interest rates or China-specific stocks. Think of Alibaba, think of Starbucks. I was also in a play CSIQ, a solar play, and a lot of those plays took a little bit of time for the early month of January to recover. We did eventually get out of most of those plays for a profit. Some of them we closed for a small loss. And since then, guys, it's just been really steady premium generation for the account. However, we did get hit with a couple of things here over the past 2 weeks, which has been a reason that we have been off our year-to-date highs of the portfolio of roughly about 2 weeks ago. And those things are the following here, guys. Well, number one, I got a little bit of downside here from Apple, as you can see, right? Apple, we've been assigned 200 shares of Apple, 100 of them at 180, and the other 100 last week, unexpectedly, after we got crushed on Thursday on Apple, right? From the lawsuit, pretty much. We were actually standing to end the week pretty much above 175, but this was an unpredictable day from anyone here, which is why we got assigned an additional 100 shares. So obviously Apple trading down towards the lower 170 range has given us quite a decent unrealized loss. You can see it on the screen down here. Let me move myself over. So a couple of these plays, guys, just, haven't come back yet. Nike, we got hit hard on Nike with their earnings, right? Our average cost on Nike, currently, that's not the right average cost. It is currently sitting at about 110, I believe. Let me just pull it up right now. Yeah, our average cost is sitting about 109.36, right? Nike has just not been kind to us. So I'll try to average down as best as I can in the lower 92 to $90 range. If we get assigned another 100 shares down there, our cost basis will come closer to $100. It's going to be easier for us to start writing some covered calls when we get closer to this area, right? But Nike just haven't been able to write many covered calls on this stock since being assigned after their earnings play, which is why I tell you guys, be careful playing earnings, because sometimes you get stuck in plays, and although they try and give you some exits close to your cost, it just sometimes never gets back up there for a while. This is my fault specifically, not blaming the market for this. I played earnings. I suffered the consequences. Now you're seeing me deal with the consequences here, but still happy with the position. Long-term, love Nike at these levels, just hasn't been kind to us. Still taking out, roughly right now, about $11,000 in buying power, and we just don't have much to show for it. So that's been something hitting the account this current year. The other thing has been Alibaba. We've been assigned in Alibaba for a while now, but I love this level on Alibaba, so I'll continue to play this one as well. Right, Alibaba, our average cost after being assigned all the way up here at 82 has now been brought down to about 76.5 after writing all of this premium since being assigned. Alibaba maintaining a nice range here between about our assignment price, our average cost pretty much $76.50 at the $70 range. So I'm looking to still play Alibaba aggressively down here with some short puts and just adding to the tally of this premium, reduce our average cost, and very shortly, guys, talking probably within the next month or so, we'll probably be able to get out of Alibaba stock. I do want to ride this one, however, closer to my break even, but there's just something telling me, guys, that this China trade is literally about to explode, especially with how broad the market has been getting. So we'll stay patient on this one, still looking to get some nice juicy gains from it. So once we recover, guys, from Nike, Apple, and Alibaba, if those three can run in our favor, you can see how many unrealized gains I have on those. That's about what? About $3,000 worth of, roughly $4,000 worth of unrealized gains right there. So if we can recapture a large portion of this, there's no problem. There's nothing in my mind that's telling me we can't really start outperforming these indexes here. In the meantime that we've been assigned those, we just continue writing additional put additional plays from the put wheel, right? So this week you'll see the one that's currently active. I mentioned it yesterday in yesterday's video. CELH, we have a 78 put play. We got 65 cents for it for next Friday. Now, CLH had a little bit of a sell-off yesterday after they decided to pay Pepsi more for the distribution deal, even though Pepsi didn't ask for it. CLH was just like, you know what? You guys have done such a good job. Let me give you guys some more margin because you guys are doing such a great job at placing our products on your shelving space. Right, so $78, we're looking right below here, which is going to be the bottom end of the trend line. It's really not specific to my strategy whatsoever. My strategy really looks for areas of support like this. But guys, this is one of my favorite stocks. I would not mind being assigned at 78 because if we get assigned at 78, even if we continue dropping to our next area of support, which is 70, that is where most likely I'll start throwing in some more averages. Just really looking, guys, to get some more of this monthly uptrend going on CLH. So if ever we're assigned, I really won't mind. It's one of my favorite plays. Counter to a bit of my strategy, right? It's not an area of support. The only real area of support is this trend line right here, which I wouldn't say is a solid technical basis to base a trade on. I just like this stock. I thought that the sell-off was a little bit overdone, and the premium for the amount of risk that I was taking was fairly juicy for next year, for next week, right? So if CLH comes all the way down there towards towards the 78 mark, that'll be a 22% sell-off. And in the recent bull market history of the stock, right, pretty much since the early onslaught of 2023, you can see that whenever this stock pulls back after going on a rally, it usually only pulls back about that 22, 25% in a number of instances, right? 20% here, 20% here. We're not going to go back here because the company wasn't putting up as much growth metrics, but even back there, guys, you know, only 30%. So I'm really not playing with too much fire, in other words, at these levels. That being said, we'll see what happens by the end of next Friday if we get assigned or not. Now, we did close out a few AMD trades over the course of this week, so we made a couple plays on AMD, a few during the course of the week here. So early on in the week, the first trade that we made on AMD was, let me just check right here. So the trades we made on AMD were, we sold the, well, where are they now? Well, we sold the 172.5 puts here early on in the week. So those are looking very good here, guys. We actually did two of them. So we sold one for 75 cents here early on the week. Let me move myself over. We sold one for 75 cents, and then as it dropped, we sold another one for 96 cents. Now, the midpoint between the two was roughly about 85 cents each. We were able to close them later on in the week, actually about a day later when the stock moved up. You can see we closed them here for 39 cents. And what did we do for those, right? So we closed them about 50% profit. Well, I went in and I wrote one strike higher. We wrote the 175s for more premium, and those were able to be closed today pretty much for worthless. You can see right here, two 175s closed for a penny. So all in all, the trade on AMD looked something like this on screen right now. So here you have your two 172.5 AMD contracts, right? We got about $94 on the 172.5s, and then we got all of the premium on the 175s, about 148 bucks. Relatively slow week for me in terms of premium generation, guys. Most of the trades had to be made on Monday because Tuesday, Wednesday really didn't offer anything. And considering the fact that it's a short trading week, you know, on Tuesday, even on Wednesday, unless stocks have significant declines on that Tuesday or Wednesday session, it's not going to open up a lot of premium because there's only 4 trading days in the week. And you guys know what happened on the indexes this week, right? Everything was relatively flat, as we've been kind of jokingly saying all week, right? Flat SPY, flat QQQ, not much volatility, not much price action. So that's why we didn't get too much premium this week. However, still good, guys. We didn't get assigned everything. Every single one of these plays went in our favor. So looking good. The Intels, they're not on screen anymore, but we closed those, wrote those for 23 cents. You can see those in Monday's video. Google, we also sold out of. Those was pretty much to reallocate the premium to more AMDs. So was happy about that, right? Almost same exposure, but I was getting more money for AMDs. Even the Babas we closed today. The Caesars we closed earlier on in the week as well for almost pretty much worthless. So everything was looking very good. Caesars, we pretty much closed, reallocated the premium, which was about, you know, $8,000, right? Two times $4,000. We reallocated that to one CELH contract for next week. All in all, very good week, guys. We still have the rest of the positions as well here. Apple calls for the month of May still on deck. Even though we're down on them, I'm still fairly confident in Apple's ability to put in a few green candles in a row, guys, would really bring these calls back to the positive side. Really don't need to hit 180, although 180 would be nice here before the month of May, and I do think it is achievable. Now, the Amazon call, we're up roughly, let's call it, not that much money on them. We're up about $150. Not too sure why it's only saying 78.40 here, but we're up roughly, $150 here, $1.50 on our Amazon contract. Those are the 160 in the money calls for next March. So giving myself a year, looking very, very good on Amazon, looking to play the breakout. We still have a few of the swing trades, right? MELI, SPGI, and the rest we went over. Nike, not high enough for covered calls, but I'll be looking to write more puts in the 90 range, bring my average cost closer to $100, which will provide an easier exit for us, in my opinion. Now we also have BABA. I've explained that one as well. Apple, explained that one as well. My Canadian banking shares now doing quite well, up roughly $2 a share. And those Canadian banking shares, I was saying how great of a trade opportunity they were the entire time that they were down there. And now look, just ended the month beautifully. Monthly uptrend started a new first monthly uptrend since we started selling off in 2022. So looking forward to riding this one, all while collecting a healthy 7% dividend paid monthly, and I just reinvest the shares. So those are pretty much all the trades that we've made over the course of the week. I'll run through this list quickly. Oh, I didn't even cover ON Semiconductor. Do I have ON Semiconductor on this list? I don't even have ON Semiconductor on this list. We can add an extra $20 to this total, so roughly $355, not that it makes that much of a difference, but we did write the ON Semiconductor 71 puts on the Monday session here, on Tuesday rather, for 20 cents, and we closed them pretty much for worthless 3 cents here. So everything looking very, very decent indeed. Nothing bad to say about the whole week, as we just continue on running the wheel strategy, right? This performance is going to increase as we start recuperating a lot of these unrealized losses here. Nike, BABA, and Apple really holding us back. Other than that, guys, it's been a very good year of premium generation. So hopefully you guys enjoyed the video here today. And tomorrow, obviously, no market open, but I'll try and put together a video. A few of you have asked me to do a bit of a more deep dive on crypto and the plays that I have in crypto specifically. So I'll see if I can put together a video for you guys tomorrow over the course of the day. But as a whole, if you enjoyed the video, guys, consider dropping a like. Really helps me out for the growth of the channel. Consider subscribing to the channel if you're new as well. We do these daily market recaps every single day, Monday through Friday. And obviously, guys, if you have any questions whatsoever, please feel free, as usual, leave them down below in the comments, and I would love to answer you. Anything you want, guys. Technical analysis you want. If you're looking at an options play, anything you can possibly think of, leave it down below in the comments, and I'll be happy to answer. Take care. I'll see you guys soon. Peace.